Hello everyone, Doug Tabor here with your Waco, Texas rental market update for June 2025. If you only know Waco from the TV show Fixer Upper or that crazy cult of the 1990s, there's a lot more to this market than shiplap and crazy cult stories. This is a lovely, well-maintained, mid-sized city in central Texas that punches way above its weight in style, visibility, and investment potential. We spent several days on the ground in Waco and would have spent several more if we had the time. Let's break it down. Waco sits in what's often called the heart of Texas, and in 2025, it's showing signs of economic and population momentum. The metro population is 299,217 people at the time of this recording. That's a lofty 7.59% year-over-year population growth. Median household income is $63,880, up an incredible 7.92% year-over-year. Unemployment, just 3.3%. That's way below the national average and some state averages. This is not a stagnant market. It's growing, it's diversifying, and it's drawing attention well beyond the Texas border. Waco had a bit of a bad rap from that cultist debacle in the 90s, but has since captured national buzz and a family-oriented conservative image thanks to Fixer Uppers stars Chip and Joanna Gaines and their Magnolia brand. The Magnolia silos now attract over 30,000 visitors a week. We were able to go, and we love what we had to see. That foot traffic supports an entire retail and hospitality economy. But it's much more than that. It's a cultural destination with shopping, exploring, and simply enjoying the space. Waco was also the first city in Texas to earn a tourism-friendly community designation. From the award-winning public library system to national honors in adaptive community sports, this is a city investing in its livability, and it shows. And don't overlook its institutional anchors, from the lovely grounds at Baylor University, major healthcare systems, and its strategic position on the I-35 corridor. That adds real ballast to the rental demand profile of this town. Let's talk employment. Job growth is at 2.3% year over year. I was able to find over 7,000 job postings on Indeed, with 2,000 of them paying above the median income. That's not bad for a town of this size. And new employers are rolling in. Van Tran Transformers, Electrolit, which is part of the Keurig Dr. Pepper brand. By the way, Dr. Pepper was invented in Waco. Amazon Robotics, Coca-Cola Southwest Beverages, Graphic Packaging International, TSTC's new worksite training facility, to name a few. Top employers include Baylor University, Ascension Providence, H-E-B Grocers, the Veterans Administration, and of course Magnolia itself. The labor force here isn't massive, but it's stable and growing, which is important, especially for rental property owners. So here's your rental market snapshot. Vacancy rates are a bit high at 10.2%, but that's because there's a lot of new Class V multifamily popping up around town like mini markets across the country. Average rent for a 2-bedroom unit is between $1,200 to $1,500 a month. That's well below the national average of $1,771 a month. Year-over-year rent growth, just 0.2%, which is essentially in line with today's averages. This is a renter's market in terms of affordability, but still producing cash flow if your basis is solid. Most Class B and Class C operators are leasing on stable rent collections, not aggressive growth. Let's talk about the single-family market. Median home values are a low $227,000. That's down 3.4% year over year. Like other markets, there has been a building frenzy Around 300 new single-family permits were issued last year alone. Median price per foot, $178. Median days on market, 41 days, slowly becoming a neutral market. Inventory is moderate. I was able to find 169 active listings under the median home value. Let me repeat that. There are currently 169 listings under $227,000 on Zillow. That makes it an attractive zone for investor acquisition in a very strong university town. Let's talk about multifamily, my area of expertise. It's not a very big market. There are only 15,720 units total. It's also not a very active market. I was able to find only 14 active multifamily listings on the market. Median price per unit, $107,000. Cap rates, not bad, at around 7.6%. Median days on market, pretty high at 96 days, which means it's probably considered a buyer's market at this point if you can find something to buy. There are currently 190 units under construction, and there have been 675 units absorbed in the last 12 months. Low sales volume, but relatively high absorption for a market of this size. The multifamily market here is thinly traded, but not stagnant. Let's talk operating costs. Property taxes. 1.93% of assessed value. That's about 35% higher than the national average. Remember, Waco's still in Texas, known for no income tax, but high property tax. Insurance costs, $1,800 to $3,000 per year for a single family home. That's higher than the national average, but below DFW metro averages. Water and utilities, $60 to $75 a month, below national norms. All in all, operating expenses are not light, but they're manageable with the right rent-to-cost structure. How about the legal landscape? Texas remains a very, very landlord-friendly state. Rent control, completely banned statewide. No-fault evictions, 30-day notice, either side. At-fault evictions, 3-day notice to vacate. As I like to say, bad tenants don't turn around, they turn over. Security deposits, no cap, but must be returned within 30 days after move-out. They're very strict about this. So what's the market sentiment for tenants? Tenant sentiment here mirrors national trends. Firms like Neighborhood Works Waco are praised, while larger, more corporate firms get less favorable reviews. For investors, that translates into retention risks or advantages, depending on how you manage. So here's my final take. Waco's not a boomtown, but it's quietly becoming one of Texas's most balanced mid-size investment markets. Solid fundamentals, low unemployment, manageable costs, and growing employer interests make it worth a serious look. It's also situated nicely between major metros like Austin, DFW, and Houston. If you're an independent landlord looking to exit rent control markets like my home state of California and roll that equity into a tax-efficient, stable, and still affordable metro, this is a market to watch. And remember, if you want to explore 1031 exchange strategies or capital preservation plays, check out my free webinar at www.rentalownerworkshop.com. Again, that's www.rentalownerworkshop.com. You can find the link in the description below. Don't forget to like and subscribe. And until next time, I'm Doug Tabor. Here's to moving from the terrible T's of rental ownership to the terrific T's of passive investment. Time, travel, and tranquility. Thanks for watching, everybody.